Hi everyone, welcome to Think Wealth TV. We are new here on YouTube, so if you enjoy the video, please like and subscribe. Today we're going to be jumping into a detailed look into my personal portfolios, so that way we have full transparency for future videos on what I'm investing in and what I'm doing. Hope you guys enjoy the video. Let's jump right in. All right, inside the M1 Finance portfolio, we have $5,744.83 in equities, $235.78 in cash. That brings our total to $5,980.61. We did have $6,000 in there on June 11th, 2019, so it's a little over a year old. We're down about $20. Activity for the week, we don't really have any. The last activity had was August 3rd, 2020. It's $15.64 dividend from AT&T, so no activity for the week. And if we jump into holdings, we have biggest being Avi, followed by 3M, AT&T, Ventus, Kellogg, Philip Morris, BTI. Philip Morris and BTI, I will most likely be selling out of this Roth IRA due to the fact of Philip Morris and BTI having both those holdings inside my Robinhood, so I don't feel like I need them in here. I will most likely be doing an ACATS transfer my funds out of M1 Finance into Fidelity Roth IRA. Reason being is nothing's wrong with M1 Finance as a whole. Just me personally, I don't like the trading window. Nothing against other people that do, but I don't like the trading window. I really dislike the time too, on top of that, because at opening bell, that's when to execute the trading window. You don't really know what's going on in the market. And if I like to buy on the down days, I like to know that's down. And certain stocks I'm watching, there's a certain target price I have. If it hits a certain price, then I'll execute the trade. And you can't do that. If you see a stock and it goes way down for some news, or maybe while they're doing an earnings call, they shoot down, I can't execute the trade, which is a real bummer. But I do love the aesthetics, and I do love the way M1 tracks their dividends. If you look over here, we started off with Philip Morris $250, made $342 in market gains. But if you look at earned dividends, is $19. So the total gain was $22.42, which makes a total return of 9.36%. As far as I know, most brokerages, at least Robinhood and Fidelity, the gain to be on the stock would be $3.42. That's it. So they don't include the dividend in the gain, which I think is important. I track it myself, the dividends, on an Excel sheet, so I can see how much I'm actually making on the stock, including dividends. But most companies, most mortgages, don't include the dividend for some reason. So I love that fact. And like I said, I love the aesthetics too. And then we have Walgreens, BP, Simon Property Group, Tanger, Iron Mountain, Preferred Apartments. And then we have Wells Fargo, 52 cents in there. I believe I received the dividend after I sold the shares, and that's why there's 52 cents in there. But it could have been maybe some change left over after the sale. But that is M1 Finance. All right, inside the Fidelity HSA account, we have $11,010.20. And I believe we started with a $10,200, and I used some of the money on HSA purchases, so we're doing great. I think I've had this account for less than a year, I believe about 6 months or so. Activity for the week, we don't really have any activity for the week. The last seen was received a dividend for $8.99, $7.31. And then balances, we're still sitting at $15,026.28. I want to keep about $1,500 in cash right now, so I might spend $16.28 fractional shares and buy something if I see a deal anywhere. And then in positions, we have 10 shares of VU, 40 shares of SCHD, 60 shares of SPHD, and we have a $2,000 Wells Fargo CD. And then the FDRXX, if you're not familiar with Fidelity, that's the cash sitting in a fund that earns a little bit of interest. So, and then we can scroll over. They have different metrics, information, current values of them. I really liked what the total gains and loss are. And if we look up there, the VU, which tracks SP 500, is up 21.24%, which is great. SCHD, 16.53. SPHD is course lagging 2.55, and then CD 0.3%. You don't make much off a CD, but it's still some money. And at the time when I first opened this, I wasn't sure which route I was going to go, so I just threw it into some money into C, so it was just sitting there making nothing in a sense. I mean, FDRXX makes something, but the CDs paid more, so I threw some money into a couple CDs just to start getting some money generating while I was figuring out where to put them. But I keep all my ETFs currently, as the time of making this video, inside of my HSA. My other two accounts, I have another one with Fidelity, which we're going to jump into next. That does not have any ETFs currently, but it might later on. And then neither does the Robinhood. But let's move into the next portfolio. All right, this is our bigger portfolio. This is a Roth IRA. We got $21,748.51. I believe I started the year with about $20,400. And if we go into activity, for the week, we had, it looks like we had a new core dividend of $6.04. And then we also had Realty, $4.67. Inside balances, we have $98.48 sitting there in cash. So we might buy something with that. I'm not really sure yet. And then positions wise, we got quite a few. We got Annaly Capital, Leggett & Plant, Disney, Genuine Parts, Realty, Eastman Chemicals, Nucor, Aflac, 3M, Johnson & Johnson, JP Morgan, Merck, Welltower, Unilever, Iron Mountain, Verizon, Intel, Simon Property, Walgreens, Ventas, Old Republic, Chevron, EPR Properties, Apple Hospitality, sorry, I can't talk today, ExxonMobil, Tanger, and then FDRXX is basically where the cash sits and it earns a little bit of interest. Not really much, probably pick up a penny or something. But if we scroll over, and just like we did in the HSA account, which I forgot there's actually an individual account we'll jump in. There's not really much in there yet. But we have the number one gainer being Annaly Capital at 81% gain. In that one, I really timed the market perfectly. Yes, you can't really time the market generally speaking, but I thought it was a heck of a deal. I bought in, and right now I'm up 81.05%, and that's not including the dividend. I'd have to look at what my yield on cost is, but I believe I'm making somewhere between 15 and 20% annually on dividend on that right now. Now, their dividend does change. It could change some, but I don't think with how cheap I got it, I think I'm always going to get at least 10% dividend. I think it's more likely going to be around 15% sitting there. And then once the stock fully recovers, I'll probably be up over 100% or more, and I'll probably be getting about a 20% dividend yield on cost. Because their dividend, if you're not familiar with that company, it kind of fluctuates a little bit. You know, when stock's doing good, it's making a lot of money. Everything's going great. They pay more on dividends. But with how cheap I got it, I think I'm going to be, at least for the most part, always getting a 15% dividend, if not more. And then Leggett & Platt, I bought that pretty low. It did go a little bit lower, but bought it pretty low. Disney, I think that one I believe I'll end up doubling my money on. Just got to hold on to it, if not more. And then we got, Genuine Parts. And as you go down the list, they're all doing really well. So we're not going to just name off like a data sheet every single one. Intel's down 1.78%. That one I think is going to do fantastic too. Definitely not going to be, I don't have a lot of money in there. I think I have 20 shares, so it's about $1,000. But that one I think is going to do great, even though it's down. Simon Property Group, I was down a lot. It's only being down 3.58%. That sounds great to me. I think I got about 10 shares total, both the Fidelity and the M1. But that looks great. Walgreens is down. Seems like that one's always down, at least for me right now. So that's more of a turnaround play. Hopefully that works out. And then you got Ventas down some. I think that one's going to recover just fine. ORI, it's an insurance company. That one's down some, but that one I think is going to do good. Then, of course, we'll just group these two together. You got Chevron and Exxon. They're both down. Of course, oil's down. And then EPR Properties, they do a lot of theaters, so they're down right now. They do a lot of entertainment, so that's not doing great right now. And then you have Apple Hospitality, which is basically like hotels, motels. Actually, I believe it's all hotels, but not sure there might be motels too in there. That's down, and then Tanger's down, of course. So, go back out of there. Clicked on it by accident. But overall, things look great. So, in the portfolio, because we're up quite a bit. I mean, yes, there's some losers in there, but we're getting dividends in there consistently. And then the winners are doing just fantastic. So we're doing great in there. Let's move on to the next one. Inside the Fidelity individual account, this is actually the smallest. I forgot about it altogether, to be honest. There's $138.85 in there. This money all came from my Fidelity credit card, completely free, which is great. And basically, I just earned 2% back and everything spent. I paid my bill right away, so there's no interest occurred. So that's all completely free. If we switch into activity, we didn't have activity for the week. The last activity was 8/4/2020, and it's 34.38. That was more free money from my credit card. Just from using my credit card, it paid me 34.38. And then if we go into balances, we have 34.58 sitting there. We're going to be buying something with it, just waiting for a red day. And then positions, we have SCHD, which is 1.032, SPHD 1295. It's about 1.3 shares. And in my HSA account, I did have ETFs. I forgot about this one because, in this account, I got ETFs as well, just because it's so small. Starting off, I like to just start with the ETFs being so small. And then for total gains, SCHD 13.24, SPHD 8.78. So that's great returns, especially since none of this cash is even mine in a sense. It was all from the credit card. So I didn't have to put any of my hard-earned money inside of this account, which is just fantastic. Thank you for sticking through so far. We're going to be jumping into Robinhood portfolio next. We do a lot of activity in that one. That's the busiest portfolio I have. And if you guys would like a free stock from Robinhood, there's a referral link in the description below. Make sure you guys read the disclaimer at the beginning of the video. There's also one at the end. Thank you. Inside the Robinhood portfolio, we have $27,971.67. Real quick for the day, we're up about $35. For the week, we're up $78. For the month, we're up $1,138.79. For 3 months, we're up $3,438. Per year, we're down $50. And since we started, we've been going in the Robinhood for a little over 3 years. I can't go over any more with my thumb, because it's hidden my case. But a little over 3 years, I've been using Robinhood. Being up $100 to me sounds great. At first, I did some trading, mostly swing trading, a little bit of day trading. Made some money, but I probably lost more than I made. And then we did some dividend yield traps. Probably lost some money there. So overall, being up $100 to me sounds good. Been making a lot of money off of calls or contract premiums for calls and puts. Do a lot of puts mostly. Average somewhere between probably $200 and $400 a month. So that's great money just for the premiums. And then you have actual dividends, probably like $130, $150 a month. And if we look in here, if you guys aren't too familiar with options, you have, they look like the first one's HBI's Haynes, that's 90 cents, T's 22 cents. So you see these, like, okay, it just looks like pennies. Well, you times these by 100. So the HBI call, I sold that for $20. It's worth $90 right now. I keep on a different spreadsheet, Excel, my yield on cost for the shares. So Haynes is actually about $10.63 a share. I got a 15-cent dividend on its way, which will bring it down a little bit more. And if this fills, I started buying it in January, February, which I imagine it's going to get executed on the 21st. I pick up $1,500. Really, I make $450 off of Haynes, which I think is good. AT&T, I like doing naked puts for them because I wouldn't mind picking up another 100 shares. And I usually try to do $50. The premiums are getting smaller and smaller because AT&T is getting less and less volatile. So I might stop doing those because they're starting to pay less and less. That way I don't have so much money tied up in collateral. PBCT, that trades in $5 intervals. I sold it for $40. Right now it's worth about 20. It says 18, but it's really 20. Maybe I can get lucky and do it for 15 if I wanted to, but I'm not going to. I'm going to wait. Right now the plan is it could change to these contracts are worth about $5, and then I'll just buy them back because normally about 2 weeks before they expire, maybe a week, they'll probably be worth like $5. I'll just buy them back then and do another contract out for them. And then Exxon, I've been doing a little bit of swing trades with the contracts, not the stocks. And I picked up about $225 in the last 2-3 weeks. So I've been doing pretty good there. Ultra Group. That one is I did it today at 98 bucks. It's worth about 94. And then Exxon I did actually yesterday for 104. That one you're actually seeing, it's worth about 103. So that's stayed about flat, both of those. Going into holdings, I got AT&T, 200 shares of those. I'm not doing covered calls because I don't want to lose the shares. I like the shares. I wouldn't mind having 300 shares of AT&T. Altria, 75 shares. Coca-Cola, 50. I do like Pepsi. I swing traded Pepsi, unfortunately. I think I paid about $110 a share last March, about at the bottom. Maybe it was April. And I sold them, I think, for $115 a share. So I picked up 50 bucks, but really I should have just kept them. The stock's worth a lot more than $115 right now. So that kind of sucks, but it's better to make a mistake and make money rather than make a mistake and lose money. And then we got Abby, 20 shares there. Remember, we had 20 shares also in M1, so we're about 40 shares of Abby. That's a pretty big holding. IBM, 125 shares. Some people like IBM, some don't. It's a turnaround play for me. I think it's going to end up coming back and make some good money on it. Philip Morris, have 25 shares of those. Exxon, 40. Chevron, 20. Oxy, 100 shares. Now, with Oxy, I'm probably getting a little bit of flack. With Oxy, I was doing covered calls when they bought the Anadarko and the stock was tanking. And I did pretty well with swing trades and the option contracts, premiums. I think I made about 700 bucks, but I'm still down about $1,500. So that sucks being down. But like I said, I bought it as an asset play. I didn't know there was going to be a trade war. I didn't know we'd have the 2020 crash. So it kind of really sucks, but it is what it is. We talked about Haynes earlier, BTI, Ford. Same story with Ford. I did a contract for Ford right before the crash. My cost basis, and that's about $790, something like that. So it's not down too much there, maybe 90 bucks or so. Well, I guess 90 bucks on 100 shares that were from the contract, plus the 40. Ford, GM, to me, they're a great play in a recession. So if people would have bought them in March, April for $4 or $5 a share Ford, that'd been a great buy. I think it'll go up to about 10 bucks. Who knows, maybe more. I'll probably sell 100 shares at $8.50. I'll start doing covered calls once it gets up more and the premiums are actually worth it. And then another 40 shares, I'll probably sell anywhere between 8 and 10 bucks. I'll just get out of Ford. Nothing wrong. People like Ford, but the dividends cut, and well, it's really best to buy for $4 or $5 shares during a recession. So I'm going to let that one probably go, but for profit. We have Duke Electric Company. We got Southern Company, SO. That's another electric company. You have 10 shares of Duke, 15 of SO. PBCT, that's the People's Financial. We got a contract going for that, 50 shares. If the contract gets filled and end up with 150 shares, I'll probably sell 50 of them and keep the other 50 for 100 total. I like that company. That company is a bank. When I bought these shares, average cost $10.63. I think it's like about 6% dividend yield. The yield on cost, somewhere around there. I didn't do the math off the top of my head, but that's what I'm guessing. And during 2008, they did not cut the dividend. I think they either stayed flat or got a raise. Their dividend history looks phenomenal for banks. There's not a bank that I've seen, if you guys know any, leave them in the comments, that has better track record for dividends. Did not cut in 2008 and looks great. PPL, another utility company, $20. I think I paid $24 and change. Some up there. PEG, that's like 48 and change I paid. That's another utility company up to 55. Wells Fargo, I don't know exactly my cost basis, but it's about $25. I do have JP Morgan inside my Fidelity Roth IRA. And with Wells Fargo, that is a turnaround play. Just to give you a real quick rundown of it, is I do think I plan on getting 40 shares. So that'll be, if they're 25 bucks a share, that's about $1,000. I'll have in Wells Fargo. I think that stock's gonna at least double. It might take a few years, but I think it's gonna double. And what I'll probably do is when it gets to 50 bucks, I'll probably sell 10 of the 40 shares. When it gets to between 53, 55, I'll sell 5, and I'll sell the other 5 between 55 and 60. That'll leave me with 20. If everything works as planned, before I start selling shares, once it hits $50, that stock will be worth about $2,000, all those shares. And I only paid $1,000 for them. By the time I go selling in intervals like that, I'll probably, with dividends and everything else, I'll probably make around 1,100 bucks. And then I'll be left with 20 shares to basically be free. So in reality, I'll make 100 bucks and have 20 shares for free. Next, we have STX, Seagate. They make, I believe, all their own hardware and parts for their hard drives and everything. So their profit margins are great. I like that company. BP, only 10 shares on it, but BP, 20 shares. RDSB, Shell, 15 shares. And if you look at Oxy, those Oxy Plus or warrants, I got them for free. Now, I don't know if they were actually free. The stock probably dipped a little bit because nothing's really free. But what the warrants are is I have the rights to buy Oxy shares, 12 of them, at $22 a share. Now, right now, it's not a good deal, but they're good for 7 years. If somewhere between now and 7 years they go up above $20, I could sell those. If those 100 shares that I have right now, if it goes up in price, I'm probably going to do a covered call, and I'm just going to get rid of those shares and hopefully make some premium and a little bit of profit. But the warrants I'll hold on to a little bit. Once the stock's overvalued quite a bit, then I'll sell those warrants. If we go into history, and we see starting at the 10th, there was a bunch of stuff. If you guys want to pause the video and look at some of the stuff, starting at the 10th, it's been about a week. I've done some different calls, canceled, bought some things back. Aflac, that one I made in the last couple weeks, probably about $150, something like that. Did really good with Aflac, doing some swing trading on premiums. I do a lot of swing trades. I don't recommend trading. If you did any kind of trading, it'd be a swing trade. I wouldn't do it intentionally. I'd plan on being able to hold them for the long run. But definitely, if you want to take some profits off the table, I agree with that. Dividends. We got coming up, we got $23.60 from AVI, PBCT, that's People's Financial, $9, BTI $13.44. Then going into the next month, we got Haynes $15, Wells Fargo $2. $2 sucks. Big dividend cut. I think last time I had 40 shares and I was making $20 and change. And then you got Exxon $34.80, IBM $24.45. So we got quite a bit more coming for September. This is just what's pending up right now. We're going to have still Chevron, BP, Shell, and I believe I got maybe one or two other companies. So definitely got some dividends coming in September. Got some more still coming this month. And that is about it. 457K plan, we have $33,011.93. We're up 5.3% for the year. If you guys are not familiar with what a 457K plan is, it's basically a 401k plan, but you have to have worked for a government employer. I believe there's other ones that qualify for the plan too. I believe maybe certain nonprofits might be eligible. But for the most part, if you have a government employer, you can get a 457k plan. The main difference is with a traditional IRA and a 401k, you have to wait till you're 59 and a half before, that's the earliest you can start withdrawing funds. With the 457k plan, once you separate from your employer, or you end up leaving that employer, you can start withdrawing the funds. Penalty free, but you do have to pay taxes, just like if it was in a traditional IRA or a 401k plan. So the nice thing is you can work for a different government employer, but as long as you leave that specific employer, you can start touching your funds, which is nice. The plan is, as of right now, to start withdrawing $9,000 to $10,000 a year, starting next year. And the reason I set that amount is for taxes, so we don't have too much in taxes. And the reason I'm pulling the money out is because all the money right now is an S&P 500 index. You don't really have a lot of choices like a typical 401k plan when it comes to what you want to put the money in. There's nothing wrong with it being in an S&P 500 index, but the problem is the plan itself, I believe, charges about 1% to be in the index, and then they charge other certain fees on top of that, kind of hidden fees. So I believe I'm paying somewhere between 1% and 2% in fees. If I transfer my money out to either a Roth IRA in Fidelity or my Robinhood, what happens is I can move it into, even if I moved it into the same thing like the VU ETF, it'd be an S&P 500 index. But the management fees, either I'd have to look it up, it's either 0.03 or 0.06%, way lower. So it's beneficial to move my money out. So this does conclude the overview of my portfolio. Hope you guys all enjoyed the video. Please remember to destroy that like button, subscribe to the channel. There's more videos to come. Thanks again, guys.